The Hedgeless Horseman here. It's July the 30th, 2024. Um, First of all, thanks to my sponsors. Uh, Today I'm gonna go through some news. I'm also gonna, as per usual, talk a bit about investing, some, let's say, psychological tricks and some truths and some, um, yeah, some common sense basically. That's about it. First of all, commodities, quite a volatile day. I think I looked at gold in the morning or early in the market open. I think it was red or it was neutral or some. I think it was actually green for a while, then red, and then all of a sudden it went up, and silver had a nice reversal. And again, goes to show I have absolutely no idea where metals are gonna go. Not even within the next 24 hours. Um, the only idea I have is that over time, meaning years from now, I think the metals are going to continue to go higher. So that's basically the entire simple macro theme why I'm in miners. I think real assets are going to go up in real value. I think the supply demand fundamentals back that up because you can see, I think I talked about this recently. It's like we see an all-time high in gold, but where do you see all the gold miners saying that they're gonna start a new mine, for example? The only thing I've seen recently was kind of the opposite. It was Victoria Gold, which had to shut down its mine due to a leach pad failure. So I simply, you know, I don't see where this big response is going to come from. Of course, pretty much all gold ever mined is above ground, so in a sense there's infinite supply because it doesn't get consumed. Uh, but obviously we're not. I mean, we're still seeing all-time high gold prices, and it's like that fact hasn't stopped gold from eight bagging from 2000 to 2011, for example. And the funny part is that the West is not even participating yet. And I've seen a few veteran investors in the mining space talk about this fact, and it's quite interesting. I was discussing this with a friend who's also in some junior miners, and like he said, he cannot believe. It's like, how can gold go up so much? I remember during PDAC everybody was expecting gold to hit 2080 and basically break down again, because that's what we've seen all the way since 2020. I mean, it's kind of fascinating. I didn't realize this until I looked at the chart. It's like we spent around 3 years bouncing under 2000 in gold. So it's like 3 years of consolidation, 3 years of our lives. It felt like, I don't know, it didn't feel like 3 years, even though it felt like a long time in a sense. But I guess it's simply because the contrast is so stark. It's like, okay, you have gold bouncing around all-time highs, yet, the juniors basically spent the 3 years in a bear market. So I guess that's why, you might not even think about what gold actually did. Then of course we broke through 2080, 2100 after PDAC or during PDAC, and it just kept on running, and everybody expected that to be the go time. But I tweeted at the time that at PDAC, it's like not a lot of people were talking about gold. Most people were expecting gold to not push through the 2000 zone for real and keep going. And to reconcile what we've seen with record high gold prices and junior miners not participating. I mean, the explanation, I guess, is what I've heard some people say, that uh, the West is not looking at gold. West have been net sellers, I think, during the majority of this run up. It's the East that has bought up gold, and obviously it appears that the Western investor, they are not even looking at gold. They don't have gold on their stock screener or whatever. It's like on their Robinhood app, they don't even see the gold move. And even less they would look at the junior miners. That's how it is. It's like it's a total value sleeper because nobody that can buy this stuff is even paying attention that the East has actually pushed up gold prices to all-time highs, and that of course is the main reason why this is the greatest dislocation that, for example, Frank Gustra has seen is in his career, meaning this is the highest margin of safety for gold juniors, especially that he has ever seen, meaning it's the biggest layup he has ever seen in, 30 years. So if you're a bear on gold juniors, for example, you should probably stop investing or at least spend a few years, watching everything Warren Buffett, etc., talks about. I mean, as a value investor, this is like, I'm always all in, but I mean, if I had to pick a spot where if I wasn't all in or invested, if someone asked me, hey, would you like to teleport to the gold junior, for especially gold junior sector, at a time when gold is at all-time highs and the gold juniors are selling like it's the gold price is at a bear market price where no gold mine makes any money. It's like, yep, please do that, and I'll buy. I'll go all in because I know I'm gonna end up making money. That's where we are right now. And of course, as always, it doesn't matter what your portfolio has done. It doesn't matter if, let's say that the junior mining sector is the value place to be. Let's say especially gold juniors. It doesn't matter if your portfolio is down 99% or if you're up 1,000%. Obviously, the only rational thing is to be in whatever asset class that provides the best risk reward, where the margin of safety is the highest, where the expected future returns are the highest. And that happens to be this sector. So it's like I see a lot of people say, well, the juniors have sucked, and that's why you shouldn't be investing in juniors. It's like, obviously you don't recognize that it's just an opportunity that has grown bigger and bigger and bigger. And why it has grown bigger and bigger and bigger is simply because prices have gone down. It's very hard to get an opportunity if everything works, rationally. If the market is efficient, you're not going to find huge opportunities. Huge opportunities are spawned by the fact that markets are inefficient. So if you hate great opportunities which provide great future expected returns, then you hate making money. That's it. I don't care. Actually, I'm not going to show it now, but it's like I have a family member's portfolio. I made him buy one stock, which was, unfortunately, in hindsight, Novo. Not for a lot of money. Again, just one stock. I don't know if it maybe was $2,000 or something. And I realized, I didn't have access to the account. And then I kind of forgot about it because, I'm busy with my own stuff and I have a lot of other portfolios to manage. And I think, Novo went down 90% in total. So that's one of my projects right now, for example, to turn that portfolio around. I think I actually made him add a few, some dry powder, maybe 6 months ago or something. So yeah, maybe since 5-6 months ago, I started to get actually active because I got access to the account. That account is already green. Not percentage-wise, he's still, I think it's down 75%, but simply because I made him put in some more money when the entire sector had gotten cheaper and cheaper over 2 years, and now he's already plus. It's not like he's up a huge amount or anything like that, but he's already in the green with juniors after having a 90% decline on his one stock. And that's, what I want to highlight there is that buying when it's even cheaper. If your portfolio is down 90%, for example, the good thing is that probably the opportunities are better than they've been since you started investing. And obviously, the lower your portfolio is in absolute terms, the higher the impact of a given sum of dry powder being used to actually, average down in the sector. Of course, if you had $10 million and it went down to 95, or it went down 90%, and you don't have a job, it's going to be hard to really, buy the dip enough that's going to get bailed out sooner, or soon. But at least, yes, I absolutely expect that I'm going to be able to turn that minus 90% into a pretty good profit in the next 2-3 years maybe. And if I keep managing it, I expect him to have a very solid long-term return, despite having the portfolio go down 90% in percentage terms. So that's something to think about. I mean, if I can do that, that's at least one anecdote that even though it might look very, very dark, etc., if you keep learning, if you keep making better and better decisions, I think for sure you're gonna be able to turn around even a 90% decline. And of course, it also again shows the benefit of actually buying every month, or buying more when it's when the sector is low, buying even more when it's cheap, because again, this portfolio is already he's already made money on it, even though the percentage return of the portfolio is still minus 75% or something. But that's the best way to improve your long-term returns, is to simply buy even more when something is cheap, regardless of how your portfolio has done. So some, again, common sense. I haven't used Bear Creek for quite some time now. The tricky part, obviously, of using one stock as a proxy is that I think, for example, here Bear Creek did a huge dilutive event. So I mean, that kind of messes things up, and this is a logarithmic chart. But in a sense, it might be actually fitting, because if, as some people say, that hey, this is the biggest dislocation ever, let's say, I mean, maybe it makes sense to see that this recent bottom in juniors, maybe actually Bear Creek bottom before. I think the most my juniors bottomed in April around PDAC, but regardless, it's like, it's the opposite of a huge blow off top, basically. And if we assume that this is kind of a proxy for the junior sector, at least relatively speaking, in terms of price versus gold, let's say, or price versus intrinsic value, if we again forget a bit about the dilution, we fully expect, as per Pierre Lassonde, that the gold sector is the easiest sector in the world because it always rallies and always crashes. Then by definition we will know that someday the sector is going to trade up here, because that's what has happened for the last 100 years. You can look at the longest mining index I've seen is the BGMI. I think that's the Barron's Gold Mining Index. It has, over that 100-year period, it has a vast amount of declines, a vast amount of rallies, of course, and keep in mind that most companies that were in the index 100 years ago are not in it 100 years later. But for an industry overall, that shows that there is no bear market that lasts forever, and there is no bull market that lasts forever. So we know, and this is the main reason why I just get more and more bullish. I thought this sector was cheap back here, actually. I thought it was easy to start seeing seeing more and more opportunities where I think they're, might be worth twice as much as Mr. Market prices them at. Of course, that has just been exacerbated. So I think there's some that probably should be up 3-4x from where they are. So it just means that an opportunity is getting better and better. And it does not change the fact that this is going to happen. 100% certainty this sector is going to have a bull market. 100% certainty. I mean, you could have used this anywhere. I mean, I'm just trying to outlay, some scenarios. There's like, if we, for example, didn't bottom here, then it's going to be here or here or here, whatever. It's like we know 100% certainty, using this as a proxy, we're going to get up here one day. And of course, given how cheap stuff is right now, given that, the impressive growth prospects some juniors have, when we reach this level, if it's 2025, 26, 27, 28, they're going to be up multiples, probably a bunch of 10 baggers, maybe some 20 baggers, 30 baggers, 40 baggers. That's going to happen. It happens all the time. It's happened all through history. But at least like an easy, I mean, a pretty solid rally, still 300-400%. And I would say we're starting off from very low levels with gold prices unusually high. So imagine if gold goes to 3,000. I mean, some of these juniors could go up, I don't know, maybe some developers could go up, 20x and not actually overshoot the NPV of their projects at that gold price. So that kind of should give you a sense of like the slingshot move that's going to come one day could be absolutely enormous. And it doesn't really matter if it starts today, has started, is going to start 6 months from now, a year from now, 2 years from now. If you get 500% when the bull move comes, for example, you should be happy waiting 5 years for that. Absolutely, that's going to kick almost everyone's portfolio. A 10 bagger should be more than okay waiting 10 years for that. So I just want this to, I just want people to understand how unrealistically impatient we can be. It's like, if you just understand that this is going to happen, how much we're going to make if we have a portfolio that's pretty good, pretty decent in terms of quality, how much we're going to make, and if you back calculate, it's like, how many years should I be able to wait until that happens? If we look at the, the average market that averages 8 to 9% per year over the very long term, we should be okay waiting for years. But how most are, they bitch about every day, every week, that they're not rich, etc., etc. So then if you don't understand this, it's going to be very hard to just hodl. If you already kind of take for granted that you're going to make a shit ton of money just from being in this sector for when the inevitable happens, I think you're going to be much more chilled out. I think you're going to look at any 10-20% move from here, whether up or down. You're going to see that as pure noise. That's not why you're in this sector. You're in this sector for when we get here, and that's a massive delta. And on that, actually, I was going to, on that, inevitable slingshot move, let's say. This is a post. This is Warren Irvin. Someone posted this on Twitter, but it's from CEO.ca. Basically, a strategy used by hedge funds recently has been to short baskets of junior resource companies and then pitch them a financing. No research is done, and the shorting is done blindly and across the board. The hedge funds, through intermediaries, then pitch financings to juniors after driving their share price down. Almost all except the hedge funds short stocks through Europe and do not report their short positions, and often do not get the borrow before the short, as they hope to cover quickly on a financing. Both these practices are illegal. Illegal in Canada, yet nothing is being done about it. So, and then he goes on to say something that's a bit cut off. But think about this. I don't know exactly what's going on. This doesn't surprise me. I've seen a lot of companies, and I've talked to some management teams, and they're like, they just say there's someone manipulating our stock. There's someone appears to be shorting, and it's like there's no end. It's just almost it looks like a machine. It's like it's a perfect downtrend. Somebody's just putting some of these juniors in the dirt. Of course, especially the ones which are in need of money. I think Western Alaska is still a great example. Not much change with the case, but the stock just got absolutely floored. Went down to, 34 million CAD or something. On no news. It's like, yes, we know they were going to do a financing, but it's like, Christ, come on. It's like, it's quote only dilution. It's not the end of the world, but someone just absolutely hammered the stock. SK also been hammered. They also are, I mean, they're not doing much. They're preserving capital, but that's been hammered. Eloro probably, kind of the same thing may be happening there. They're not, well, actually they had an update which I'm gonna go through. Other examples, well, I think there's a ton of examples because you see it all. It's like line 1, for example. Before every financing, someone basically shorted the stock, and that's happened like 3 times in a row. That's obviously not coincidence. So of course this could get a lot of people pissed off. It's like, I mean, it's hard enough as it is, but I think this is one of the causes why we have such a poor sentiment. The self-fulfilling prophecy kind of. If people see lackluster returns, other people are not going to want to invest, and people are invested, they are going to want to sell. But at the same time, this is also obviously the reason why we have such huge value opportunities. So, I mean, in the end, is this good or bad? That really depends, as always, what you do. It's like what I used to say. Bull and bear markets, this kind of volatility is, by definition, not really good or bad. It simply depends on what you do. If somebody bought only in this area and sold in this area, sold in this area, and obviously increased his buying the lower it went, meaning that his purchasing, the dollars invested went up like this. So meaning he buys more and more and more and more. Let's say this is, monthly investments, let's say, and it just skyrockets all the way to, a bottom, and then I guess it would go more like something like this until he actually starts selling again when he's up to the higher it goes, and then he's out when he reaches this line, for example. That person would make money every single time so far. Well, he would make money every single time, because if you look at the BGMI, every time, let's say you started buying the BGMI when it was down 40% or something, you just kept buying, regardless of how low it went, you would end up making money every single time. What most people do is obviously the opposite. They buy up here, this happens, then they sell down here, and then they go into another sector that's quote working, and they'll buy up here again and sell down here again. So volatility is not good or bad by definition. If you can use it, basically if you take advantage of it, it's your main tool. It's your main earner, basically, the huge volatility, that we can get to levels like this. But for most people, obviously, you're going to be abused by volatility, because you're going to buy when the trend is very favorable, buy more and more the higher it goes, your portfolio grows and you get more confidence, you're going to buy even more, and then this happens. And then you don't have the will or whatever to stick it out, and you haven't done the research, you just wanted to get rich quickly, so you didn't really do the work, you didn't do much due diligence, and then you finally sell here because apparently it's not quote working for you. So you'll never be on board even when the inevitable bull run happens again. But consider this then, that if it's artificially, in a sense, illegally cheap right now because of illegal short practices, they also have to cover one day. So if we're starting off from an artificially cheap level, that means there's a larger delta between price and value. If there's a bunch of hedge funds short all these miners as well, that means they're going to be forced buyers one day, meaning that regardless of where the price is, they will have to go out and become buyers, even if it's a top, even if they don't want to buy. So we can just imagine, it's like, I think this is one of probably the most stressful most stressful this sector has been in a few decades. But you can just imagine the same reason why it's frustrating right now are probably going to be the same reasons why the future looks so bright. Starting off at an artificial low level, a lot of forced buying that's just waiting to happen. Because if something happens, I don't know what's going to trigger it. If all of a sudden people talk about gold, if tech starts to take on water, if Stan Druckenmiller says I'm buying gold miners, if gold shoots to 3,000, I don't know what's going to trigger it. The juniors are going to start a rally, a massive rally one day. And then you're going to have all these hedge funds that probably have become quite arrogant from just being able to short everything all the time and finance. When something like that happens, or who knows, maybe the sale of Philo Mining, for example, which was announced yesterday, 4.5 billion. Something like that gets, people get money in their pocket, they can start investing in it in some other names. Maybe they kick off, maybe the shorts have to cover there or something, and it's like some more money is getting into the pockets of retail people, and then they start spreading that around, etc., taking profits. We don't know. We don't know how it's going to happen. We just know it is going to happen. Every short has to cover one day. We know we're going to have a massive bull one day. We know we're starting off from a level where massive bulls are typically born, etc., etc. So everything is kind of rigged in our favor. It's just a matter of will you be able to hold out? Let's say we're going to have the pink route. There's we're actually going to trade down until March next year. And then we're going to have a cannon shot rally like these. I mean, some of these rallies just go absolutely straight up. But if you sell here, for example, then you're shit out of luck. Sell at the lowest point. So it's you can't really, and I've said this in a bunch of videos before, I think we passed the point of selling here already. In 2022, basically. And it was the future expected returns started to become so high that now it doesn't really matter. Now it's just a question of when the bottom will be. And I think some of the, or many buys, I mean, if we get up here, I think many buys that were done in 2022 are going to be in the green someday as well. I mean, you can just look at, Bear Creek Mining here, for example. After the rally, every single buy, except here, or this period, was in the red. Every other buy, at this point in time, every buy in this box over a 4-year period, you would have made money on. That's how crazy this sector can get. I was minus 54% here in the portfolio, ended up plus 260% or something. I started buying here, minus 54, then up 500%. I expect a similar type of rally. Simple stuff. I mean, all of this is common sense. I've said nothing that's out of the ordinary. Think about it. It's everything what I just said makes total sense for a cyclical sector with 100 years of 100-year mining history to show that no bear market lasts forever. Yet almost nobody thinks this way. It's this. I'm not. This is not rocket science. This is common sense. But almost no one actually looks at a cyclical sector like this, which kind of, is kind of surprising. But that's at the same time good. I mean, if we don't have to have more precision than that, and we still have a playbook to actually beat the market forever, I mean, that's great. Also, just one note, foolproof your portfolio. What I mean by that is people can get carried away, and most of us are not, geologists or mining engineers, etc., etc. So it's if we think we are here, and you don't know, let's say, too much about geology or mining or yada yada, it's there's a simple way to know that you're not making a terrible mistake. If you just put in If you like juniors, for example, you had a junior portfolio. I personally, I love the hunt. I can take the volatility. I'm out there, I was gonna say making moves. I mean, sometimes very ballsy moves. But I would just think about this. I mean, if your entire junior portfolio, let's say that's 20 names. If you had either Pierre Lassonde, Ross Beatty, the Lundins, any of the major mining companies, basically, mid-tiers, whatever. It's like, if you know some people like that are in something, I mean, the Lundins are investors by definition, and they can't really trade. So it's like they have to make long-term bets. They're very selective. So if you can get in anywhere close to where those guys get in, by definition, you're not making a mistake. By definition, you're probably making a better buy decision than 99.9% of people do, because that's how good the Lundins are. If you can mimic their buy, and you can sell when they sell, which is basically never or at an exit, I was going to say. I mean, you can't make it much simpler than that. It's like copying Warren Buffett's, but in a sector that actually can throw off much more money. Again, look at Philo Mining, look at NGX. You know by definition you're not making a mistake. And if they're holding and you're holding, you're not making a mistake. The Lundins they participated in private placement, but they bought Philo Mining, they had Philo Mining when it was spun out, so they were in at the beginning. They added more in private placements. Every single stock they bought, they held. And then they made a shit ton of money. They bought a few times, held for years, and made a shit ton of money. So if you can copy that and make a huge returns, like top 99.999% of juniors in terms of performance, that's a pretty good deal. You don't even need to think about it. But let's say diversify, because it's not like the Lundins by definition always have to find, if it's a discovery store, they're not always going to find a 40 bag or 30 bag or 20 bag. But spread in some other names. Maybe it's like, okay, you like producers, like, hey, Ross Beatty with Equinox. Or, Alamos Gold, which seems to be doing well. Agnico Eagle has been a favorite major for a lot of people for a long time, and for a good reason. They're the only major that basically delivers constant, or have delivered long-term returns since inception, basically. So, and to that point, if you see some of the majors in a junior, it's like you can just back calculate what the potential these miners would need to see. Newmont has a market cap of 73 billion. If you see them get invested in a 30 million market cap junior, 50, 60, 100, who cares? You know by definition that Barrick needs to see multi-billion-dollar potential in a project. If they don't see the potential of that magnitude, they will not invest, because in that case they believe. I mean, if they believe that there's $1 billion potential, that makes no sense for them to invest, because it's not worth their time. What's 1 billion gonna do for Newmont? Nothing. It's just added paperwork, basically. So if you have a junior that's like, oh, Newmont recently got into it or whatever, or somewhat recent proof of not proof of concept, but it's like a vote of confidence. Maybe they added in another placement. They were already in. Something along those lines. Because by definition that they see multi-billion-dollar potential. So you can, with your hand on your heart, you can actually arm wave about your junior. That's like, I think this has multi-billion-dollar potential. And you look at the market cap, whatever that is, and it's like, well, that would require that would mean, 10 to 20 to 30x potential. And you would be completely correct, because by definition that is what a Newmont's involvement is saying. Most of the time, I'll get burned on a lot of exploration stories. Some have had vote of conferences, etc. But it's like, let's say I'm thinking it's like this has multi-billion-dollar potential, but there's no major in there. There's no real smart money in there, if you know what I mean. Then it's like, okay, I hope I'm right about this, that there is such potential, because there's no one smarter than me that's like putting money like that would be true. But as soon as you have a junior with a major involved, you know by definition, depending on how big they are, that you, but again, by definition, you can say that this junior has multi-billion-dollar potential. If somebody says no, it's not, then you can just ask them. It's like, okay, why did Major X invest? I mean, there might be, you know, whatever. There might be caveats to that, like that they're buying up a junior that could have a satellite deposit to a, you know, mine that's getting long in the tooth. Yes, there are caveats, but it's like, I hope you get my point, because if someone says no, there's no multi-billion-dollar potential, what they're saying is basically in that case they know better than Newmont, they know better than Agnico, they know better than Agnico, they know better than whatever. What are some other majors? You get my point. That's the best way to foolproof your portfolio, because you can be rest assured that there is multi-billion-dollar potential in that case. But if you're out there in a bunch of random shitco's, no vote of confidence from, you know, no Landins, Ross Beaties, no mid-tiers, no majors, no really good funds or whatever, no smart money at all. If your portfolio is made up entirely of that, then you better have have a very good reason, let's say, why you like those cases. Because there's no one smarter than you telling you, basically, or telling the world that, hey, there's huge potential in this. And this goes mostly for exploration stories, obviously. But again, I hope you get my point. I mean, that's, I cannot stress that enough, how valuable that is, because it basically is you're ensuring you're not making a mistake by definition. That does not mean that every junior with a major involved is going to turn into a multi-billion-dollar project or a company, but it says that they have the potential. Maybe that's 5%, maybe it's 10, whatever they think it is. So you don't need many of them to play out the way the major hoped they would play out for them to pay for 10 other such juniors that actually got cut in half or went down 70, or some actually went bankrupt. So it's like, again, honestly, I mean, again, I'm going to sound like an asshole, and I know, you know, I see comments sometimes, there's like, you know, they can't understand why I like this sector, but it's like, long term, I don't see how you lose in this sector if you just have common sense and infinite patience, because this is not, again, this is not rocket science. This is the dumbest sector there is. It's the most volatile sector there is, so it's the most emotional by definition. If you guys can take advantage of some of the glaring inefficiencies in this sector, which are never going to go away, you're going to end up making money for the rest of your life, basically. And of course, it wouldn't be nice to be sitting here and, you know, experiencing this, for example. Like, this wasn't fun, but this sure was fun. And this sure was fun. But yeah, so it's like, whenever, again, just think about what Pierre Lesson says. This is the easiest sector in the world. And it's like, until you, when you get why he's saying that, everything is going to all of a sudden make sense. Because I think people believe that the markets are much more complicated than they actually are. They think you need, I don't know, 4 different screens with, you know, you have, I don't know how much technical analysis, and you have a bunch of indicators, whatever. No, this sector is pretty friggin' dumb for most of the time. And you only have to buy cheap and do some due diligence, foolproof your portfolio, whatever. It's like, I don't see how you lose in that case. Anyway, big rant. This is kind of interesting. I mean, here, Calvin Fredge, I don't know who that is, but When the dot-com bubble finally burst, value in commodities outperformed for years. That is, of course, since 2000 here. This is gold, and gold miners had a whopper of a bull market, as most people know. And I've shown this chart before. I kind of, highlighted this, especially when we got up to basically the same level that it topped out in 2000s. This is Nasdaq divided by HUI, which is a mining index. So going into the 2000 bottom for gold miners and gold, and going into the blow off obscene dot-com IT bubble top in 2000s, tech was hugely outperforming. Nasdaq was hugely outperforming gold miners. That's why the ratios went absolutely ballistic vertical. And miners sucked ass. When that topped, boom. Start of an 8, or one should say 11-year bull market. 8 to 11-year bull market as soon as this chart topped. This ratio. Value, or at least gold miners, outperformed tech for the next 8 years, or even up to 11 years. Think about how incredible that is. And what do we have here? Breakout, topped, slammed down, and now we're slamming again. And this top coincided with a, somewhat of a bottom in the HUI. So, I mean, since I know this is gonna happen, this just puts more fuel to the fires. Like, my thesis is, if we're not in a bull already, which could be a decade-long bull, we're gonna have a bull one day, and it's gonna be soon. And regardless, we know the juniors are gonna, sooner or later, are gonna rip 500%, for example. This is coming, and this is suggesting that if history rhymes, basically we might have just put in a bottom of value versus tech and artificial. I'm assuming this might be the top for Bitcoin as well. With that said, it's not like I can guarantee. Maybe this is a cup and handle formation. It goes something like this, and we get even more screwed, relatively speaking. That could happen. That still does not change the fact that we're gonna have a big bull, and this is gonna turn around. So obviously I don't expect that to happen, because it's grossly overvalued already, and the supply-demand picture for commodities is getting better and better, and the debt just keeps adding. It's like $1 trillion per 100 days in the US or whatever. So my portfolio is 100% positioned for us being in a bull, but it's pretty much always like that. It's just that I have more beta, more margin of safety placed than I maybe had when Huey was up here, or here, for example. Again, think about the implications. This could be, we could just have started an 8 to 11-year bull. That rhymes with what Felix Zulauf believes. And this is just pointing out again, nobody knows when juniors will spasm up, but we know that the next big change is higher. Why? Because they've already crashed, they're already surrealistically cheap, and it will probably come out of nowhere like always. Boom, just came, swoosh, 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 swoosh. Nobody rang a bell. Down here it was all chaos, depression, full depression, chaos, and it just wham, out of nowhere. So don't even try to, nobody on Twitter is gonna know when this is gonna start. We just know it's gonna start one day. So finally to some news. This is becoming a longer rant than I thought, as always. To summarize today's news, Goliath put out a big hole. Could be a massive hole. We're going to look at why. 6 more holes coming. First, Nordic announced that they've raised almost $4 million via warrants and options. And that's obviously enough for a very big a drill program for a junior, given that the drill costs in Sweden are $200 per meter. Inflection, Duck Creek area could be massive. That's my, the highlight. Eloro, been very busy with PA work. So let's look at Goliath first. Let's see here. So Goliath intercepts 35 grams per ton AU equivalent over 6.34 meters. True width. Two deeper intercepts have assays pending. Shorebet, Discovery, Golden Triangle, yada yada. So this is obviously a barn burner hole. 35 grams per ton over 6.34 meters, and that's true width, which is impressive. Intercepted abundant visible gold, and then why it gets more interesting is assays are pending from GD 24235, that's the same hole, on an additional 24.4 meter intercept of porphyritic intrusion between yada yada. It contains veins with abundant visible gold, molybdenite up to 2 millimeters in size, and bismuth that indicates increased confidence in the proximity of the feeder source of the shorebed system. So we know it's already hit 6.34 meters or 35. We're waiting assays for a 24.4 meter intercept, which at least some veins in it contains abundant visible gold. Do we know that's going to be like 24 meters of 15 grams per ton? Maybe it's going to be 3 meters of 15 grams per ton. Maybe it's going to be 1 meter. I don't know. It sure sounds really good that it might be another whopper of an intercept to be added to this. And it gets better. Assays are also pending on a 10 meter interval from GD. It's the same hole again. That is hosted within the andesite in a series of closely spaced quartz sulfide veins being observed. It contains abundant visible gold, up to 30% pyrrhotite, 3% chalcopyrite, 1% sphalerite, and 1% pyrite. Abundant visible gold, 10 meter interval, up to 30% pyrrhotite. If I remember correctly when I looked into it, I think pyrrhotite really correlated with gold grades. But note that it's up to 30%. This could be a 3 decimeter, I guess, intercept where it's 30% pyrrhotite and the rest is 1%. So again, we can't say too much because this is like the peak pyrrhotite, peak chalcopyrite. But yeah, it contains abundant visible gold. Here it says veins with abundant visible gold. Here it sounds like it's actually more, disseminated, which is interesting. So maybe this is, again, more disseminated. And here you might have a vein, a vein or two or more, and the veins contain visible gold, but they're localized. So we don't know. Again, it's like, I was going to say, let's not, what's the saying? Count our chickens before they hatch kind of thing. But obviously this is some of the most exciting visuals you're going to see in the junior exploration space. This one is interesting. The increase in coarser gold and base metal components observed with depth suggests stronger mineralization in deeper parts of the system as drilling ventures past the valley floor, which suggests that drilling is closing in on the heat engine source of the gold mineralizing system. We don't know if it gets better with depth, but it kind of sounds right that as we get closer to a feeder, that the actual feeder, a lot of times you hear it's like, we found this at surface, or we found whatever, and we're trying to locate the high grade feeder and stuff. So it's not like it's out of the realms of possibilities that the actual feeder to the good stuff is actually even better. What is obviously very interesting is that you have 3 different zones of VG, and remember, it's like shorebet upper lower was the that was the main event when we started out. This was the outcropping zone. This is what got me into Goliath. Now, what is it, 2-3 years later? Now they're drilling these holes and they're going through in which one is it? Here, 235. So this is going through 3 different, I don't know, shears or at least zones with abundant visible gold. It's like, Jesus, 3 different zones with abundant visible gold. That doesn't sound too shabby. It's not 1 zone, it's not 2 zones, it's 3 zones. And what's also very interesting is the fact that here you have the valley floor. So all of this that they've drilled is actually still up dip or higher up than where you would put an adit or, you know, a mining portal, for example. And this is obviously very good for a mining cost, that you have gravity working for you. You don't have to shaft stuff up. It's like you have let's say a 1 kilometer shaft that you have to, you know, have all the energy or whatever to pull the ore up to surface. Here it's like you have a free ride down thanks to gravity. One thing to note though is that not all of these, I don't know the exact orientation, the dips of these zones. I know some people talk about, you know, it might be difficult if the loads are very, you know, what is it, shallow dip, shallow angle, let's say. That is typically easier if they're kind of, you know, vertical or sub-vertical, for example. Might that play a part? Sure, absolutely. But again, that's like, yes, it might be an added cost. But it's like if you're drilling, in some parts at least, like 6 meters or 35 grams per ton, it's like you're gonna make money on that regardless if the mining costs are, you know, 50% higher or whatever. I mean, that's some cash rock right there. And I don't know the impact, but I've just seen people talk about it, and I've heard that as well. But still, maybe more importantly, so the story looks to be getting better and better with more and more new zones of visible gold, and again that it looks like it's getting closer to some kind of feeder. And of course, this is just one area. We have the, what is it? Is it Jackpot or Treasure Island to the east? So we have no idea how big this thing could get. We have no idea what happens down here, really. We have no idea what happens in other parts of the project. So just this part alone, this might be a company maker. And then you have, you know, the shorebed zone, the original shorebed zone. All we know is this story appears to be getting better and better. And then there's still a lot of room left for it to get even better than that. So is this one to look, watch? I think so. I think it's one of the most interesting stories out there. Again, is it a guarantee that it's going to be a 10 million ounce deposit and they're going to find, you know, I don't know, 2, 3, 4 million ounces of like bonanza grade? It's like, you know, almost Foster wheel type grades just because they hit 35 grams per ton over 6.34. No, it's not a guarantee. But obviously, just hitting it shows that there's potential for such mineralization. And given that we don't know much about these, they haven't been drilled before. And, you know, they still hit abundant visible gold. So, yeah, I mean, I don't know. Maybe the source is nothing, but they find a... maybe the source is nothing, but they find, you know, 1 million ounces of bonanza gold here. I mean, that's probably something you would make a mine on when you have all of this other stuff around. I know some believe it's going to be, you know, they believe at the end of the day it's going to be a 7 to 10 million ounce gold deposit or gold system. Obviously, that depends on. I mean, theoretically, you could have 10 million ounces, but they're uneconomical, for example. Well, at, you know, some gold price. But I don't think. I don't think a good case should need precision. I don't know. I don't need to know exactly how many ounces, etc. I just need to look at this and say that, hey, there's a chance that this becomes like a 4, 5, 6 plus million ounce gold deposit in BC underground with gravity assist. Maybe, you know, some difficult with some angles, but and there could be a mothership down depth. So it's like, is this pricing in another Great Bear? Great Bear sold for $1.8 billion at lower gold prices. No, I think we have room to the upside. I don't think we need. If there's a 40% chance this becomes a major mine, I think it's really cheap, because if that 40% hits, it's probably going to go up much more than 200%. If it turns out to be a tier, almost a world-class deposit, it's like high tier 2, that could still be like $1-2-3 billion. So there's a lot of room left, even though it's like, as always, you don't go all in on stuff because you're playing the probabilities and the price offered. So yeah, and of course one thing to note maybe is that, okay, current drilling. So it appears there's 3 rigs in this working here right now, and it's like good on them. It's like if you're starting to hit intercepts like this, yeah, it probably makes sense that you make the most out of the drill season, because there it appears again that there's like 6 holes or so that are being drilled around 235 here, which is at least 35 grams per ton over 6.34 meters, and it appears that was in the bonanza zone. This seems to be piercing it, 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 this seems to be piercing it. I don't know exactly where this is. I don't see the trace of this one. But okay, current drilling. So I assume they might have just, put in the, I don't know, current depth, for example. Maybe. Yeah, probably, maybe. No, wait. Yeah, where is it? Down here? Anyway. So like, I think one could safely say that, first of all, this is going to set the tone, what the next 2 intervals. We know this is a bonanza already. It's a barn burner intercept. This might get a bit more impressive or a lot more impressive. If that happens, we know that probably the 6 other holes have a good shot of potentially replicating such grade. So then you can kind of front run, there's going to be 6 additional holes after that. That might be barn burners as well. And it's like, the question is, how long is this piss poor depressed market gonna be able to not get into some kind of like appreciation mode or foam or whatever? So I think Goliath is, I think it's, probably kind of a what's the word, or what's the saying? I think it's boiling, a pressure cooker. I think it's a pressure cooker. I think after these 6 after this complete and these other 6 holes are out, maybe everybody, maybe Goliath is going to be the hottest thing in the sector all of a sudden. We don't know, but obviously it's, I would say I think there's a 50% plus chance that majority of these holes are going to have really, really good results. I mean, again, I've said this before, it's like, the most important thing in a news release is not what it said about what has happened, it's what it suggests about the next 10 news releases, because that's what you're front running. Most people, you might front run the next drill results or next drill result or whatever, and especially if the current news is kind of boring, then it's like, why care? And maybe that sets up for the next 5 to be exciting, but again, nobody maybe cares. They care about assay results. Yeah, so first Nordic raises 3.9 million during July warrants and options. Again, this is great. In the month of July, close to 4 million cash was raised for FNM, blah, blah, blah. This is a strong indicator of the investor support we have been able to build on the FNM store, and this puts us in a solid position to get important exploration and drilling work done at our projects through 2024 and into next year. No secret, I really like First Nordic Metals. I think this is one of those that have a margin of safety floor that's multiples of the current share price, and I think First Nordic, especially if we count Barsele as a whole, not the 45%, but I think the Barsele deposit, I think that's going to go to 5 million ounces or more. I think that at the end of the day, I think that's going to be a 5 to 10 million ounce deposit. It's going to be a high tier 2 or even tier 1 deposit, and especially when you bake in the 100% owned ground. If they find one additional satellite deposit with 1.5 million ounces, whatever, I mean, they have very large targets. And we know that Faboliden is there. That's like, I think it's 2 to 3 million ounces. So we know there, we already have proof of two multi-million ounce gold deposits, and their ground has barely been drilled. Påbacken barely been drilled, Storjuktan barely been drilled. There are some huge anomalies that are just sitting there. The Ida discovery has not been followed up yet. So there's potential for another Barcelona or two. Even if we don't find that, if we find 500,000 ounces at Ida, for example, or 300,000 ounces, you're probably going to make a mine on that simply because there's a mill right next door, like 3-4 kilometers to the west. And then you of course have the Barsele deposit itself, which again I think is going to turn into 5 million ounces plus on its own, and that's probably going to be worth $2-3 billion, and Barsele is going to have 45% or 30% of it depending on what Agnico does. So this is one of those no-brainers where it's like I don't see myself taking any valuation risk at face value, but at the same time get huge exposure to, at face value, risk-free exploration potential. And this was a report came out by Hallgart and Company, or Plus Company, initiation of coverage, Christopher Ecclestone. I don't know who these guys are, but like as you can see, it now has a commanding development exploration portfolio across Sweden and Finland, and Agnico Eagle as its largest shareholder. Here's a link to the report. It's a pretty lengthy report. Here's the summation. 12-month target price CAD $1.02. So that's 183% upside. As I've stated before, my long-term goal is to get 50% compounded per year. Personally, I think it can do better than this, especially in a hotter market. If I would get half of this, that's a huge return. The overall market average is 8 to 9%. I mean, if they make a discovery or something, I think all hell could break loose quite quickly. So I mean, I don't put too much emphasis on target prices, really. But my base case value for Barsele is $1.36, so it's like it's not too far off. It at least shows that hey, Barsele is probably undervalued by 2-3 times, which I totally agree with. So yeah, I mean, I think again, if we fast forward, it's like a blue sky scenario. If you come up with a 5 to 10 million ounce project in a market where gold is at 3,000, and there's almost no such high quality deposits in tier 1 jurisdictions, Barsele could be exquisitely rare in that case. Yep. Inflection Resources provides drilling update from phase 1 exploration program in New South Wales. So they finally put out the update on phase 1, which is the scout drilling. I mean, it's a pretty meaty news release. I'm gonna take away, or I'm gonna give my takeaways basically. Alistair succinctly said, I mean, I have huge respect for Alistair Waddell. He's like an encyclopedia of mining. He's worked everywhere. He's had dealings with all the majors, etc., etc. So it's like, that's one thing to note. It's like, if you really trust the CEO, if you think the CEO is smart, or whoever is running the company, or the people running the company, I put huge emphasis. I mean, it shouldn't be a surprise, but it's like, this is the comments after the summation. That is the one thing I read the most, because they're smarter than me. And in this case, Inflection Resources, I mean, the insiders have huge skin in the game, and they're very smart because they got Anglo Gold to invest. So they're gonna point out what they think is the most important. And if they think that's the most important, it probably is the most important. So I should think it's the most important. We are very happy to provide an update of our AngloGold Ashanti funded Phase 1 exploration program in New South Wales, which is systematically drill testing a diverse range of large, 100% owned porphyry targets, none of which have been previously drilled. We are particularly excited about the first pass scout drilling on the Kanonba target, which is located approximately 5 kilometers north of our Phase 2 Duck Creek project. Kanonba's promising results suggest a potential genetic relationship between the two target areas. We await the geochronology results to confirm this hypothesis. Then they go through some of the more, the highlighted scout drilling targets. Start off with Kanonba. You can read this stuff as well. It's like, okay, 500 by 900 meter discrete aeromagnetic high, tested 5 kilometers northwest of the Northern Duck Creek complex, where the companies intercepted strong porphyry-style alteration geochemistry over several kilometers. The hole intercepted Brett-shaded diorite and monsonites with broad zones of strong epidote magnetite albite, plus minus biotite alteration, which is locally overprinted by hematite, cerussite, tourmaline with minor disseminated chalcopyrite and molybdenite-bearing quartz veins. This is a lot of... I've read enough about porphyry exploration and porphyries to know that a lot of these minerals and alteration, that's what you want to see. And obviously disseminated chalcopyrite, that's a copper bearing mineral. Molybdenite, well, that's molybdenum bearing mineral. Quartz veins, minor disseminated native copper occurs over the first 60 meters of the hole. That's quite interesting. Disseminated, I have to Google that. What the import could be. Disseminated native copper occur over the first 60 meters of the hole, with concentrations locally reaching up to 0.5% along with minor chalcopyrite in veinlets and minor quartz molybdenite. These are sniffs. These are economic sniffs, not that it's an economic interval. But this is the kind of stuff. This is... if you look at the grades in the Macquarie Arc, they might run at 0.3, 0.4% copper, if I'm not mistaken, and have some gold as well. But of course, it's like what we want is not locally reaching up. We want to see zones where it's like you drill 500 meters, 300 meters, 3, 4, 5, 6, 700 meters of this kind of stuff. But it's obviously, it sounds like there's a lot of copper smoke. And note, this is the only drill hole they've drilled in that particular target. So they drill a magnetic anomaly and get a lot of copper smoke in the first hole. Yeah, I can understand why it's the highest up here. Assays report, okay, they even get gold actually up to 0.3 with highly anomalous, I think that's bismuth, arsenic and stibnite associated with carbonate bearing siltstone. I don't know exactly the importance of this, but Inflection considers that the nature of the magnetic anomaly and proximity of hole to the Duck Creek target suggests a possible genetic relationships between the two target areas, although there is currently no further data to support this working hypothesis. I just go back to the piece I recently did on Inflection, where it talks about, I'm pressing on the fact that the Macquarie Arc shows extreme clustering. And basically the thing was that if we hit at Duck Creek, if we hit the porphyry, if we show there's a copper bearing porphyry there, it suggests, based on the balance of probabilities, that there's going to be the other targets, some of them are going to be copper porphyries as well. And now they're hitting what appears to be other copper porphyry bodies, porphyry bodies at least, 5 kilometers to the north of the Duck Creek complex. And so they drill a bit more targets. I'm going to get to my punchline soon. Hole 03 drilled to depth of 489 meter after intercepting basement at 460 meter was also drilled to test a similar sized aeromagnetic high 4.5 kilometer northeast. So that's hole 3. So this is the one that I just talked about. This is this other hole. This alteration, like it observed in hole Canada, although less intense, is considered by the company to be suggestive of porphyry proximal environment. Assay results are pending. This might be a porphyry body. This might, I mean, not the exact shape you see here, but it's like, there might be a porphyry here, there might be a porphyry here, and here is where they're doing phase 2 drilling based on A&T. And I would obviously just note how... well, actually, I guess it goes together with the fact that this is that this is I think it's a magnetic slide. But it's like they don't show anything about the what drill holes have been done in phase 2 or anything like that. So yeah, very secretive so far on phase 2. They did hole 06, 9.5 kilometers off figure 1 to the north, intercepted intercalated volcanic clastic sediment and lesser andesite with minor hematite sericite alteration cut by coarse carbonate veins, which are interpreted to be more distal to any potential mineral system. Okay, so they drilled one 9.5 kilometers off to the north here, and they hit with one hole something that appears to show signs of being distally, not proximal, but it's like the outskirts of a potential mineral system. You just gotta hand it to these guys. Here you have some core, and I can't say much about the core, unfortunately. Fuck, I think I wonder if I just had a tick walk on me. Anyway, then there's other targets. Longstow hole 01 was drilled to depth of 375 meters after intercepting. 1 second. Una minuta. After intercepting basement at 312 to test an approximate 1,500 meter zone of elevated or magnetic data, yada yada. The hole intersected biotite magnetite epidot with minor K feldspar, altered volcanics cut by minor 1 to 2 veins per meter, coarse veins with minor chalcopyrite. Again, veins with copper-bearing minerals. The company considered this suggestive of a porphyry proximal environment. Geochronology samples results have not yet been received and will be key to planning any further drilling. Copper and gold assays as results for the hole were low tenor, although contained highly anomalous and favorable multi-element geochemistry. So we don't know, but they're hitting some copper at Longstow as well. Again, just one hole. Hole 02 located 620 meters southwest of hole 1 intercepted weak to moderately epidot altered conglomerate and minor sandstone. As a result, report best results of 2 meters at 0.15% copper and 0.02 grams per ton gold from 320 meters. They're finding sniffs. Again, the company considers this suggestive of porphyry proximal environment, and they're finding sniffs, copper and gold. Copper minerals. That just doesn't fall out of the sky, if you know what I mean. And these are some of the world's best experts doing this porphyry exploration. Just check out the technical team. Bruin, 2 holes were drilled, yada yada. Test a magnetic low. Intersected a granodiorite with minor magmatic breccia, which consists of quartz-rich granite and hematite, altered tonalite, rare chalcopyrite, bornite-bearing quartz K-feldspar veins, and carbonate, yada yada, or pyrite as well. The hole intercepted the basement sequence at 594 under a sequence of post meters. So very deep cover, 600 meters of cover. And to represent okay, this tested a magnetic low, this tested a magnetic high, intercepted muscovite bearing granite, blah blah blah, S-type granite not typically associated with porphyry related copper gold mineralization. Due to the low tenor of the assay values and thickness of the post-mineral cover sequence, the company has downgraded Brew on target. Might be something there, but the cover is thick as hell, at least in some parts. And I guess they're not seeing that it's a screaming signal that there's a porphyry nearby. And again, it's like, hey, we need to get lucky once. We don't need to chase we don't need to spend I'm not going to say waste, but you know what I mean. We don't need to blow the budget in the earning agreement on targets that might be the 6th best target, especially when we haven't even tested majority of the targets yet. So this, I mean, again, this is downgraded, but that's still in the cupboard. Baruma, blah blah blah. Whole initiative for magnetic hornblende diorite. Again, it's like this is a hell of a news release. A rare car. Okay, the Baruma target, which the company considers to exhibit porphyry potential based on the intersection of an altered diorite with minor chalcopyrite, again copper-bearing mineral, will be assessed once key geochronicle results are returned. Other targets, so there's a bunch of targets that were tested, and they're waiting for assay results, but the generally returned little or no favorable alteration, therefore have been downgraded. The company, in conjunction with AngloGold, will wait for assay results from the laboratory as well as saber. So it's like wait and see. It's like we're not ecstatic about what we're seeing. And then phase 1 and phase 2, they start talking about, and phase 2 here. Phase 2 drilling on the Duck Creek target commenced in June as planned, testing a variety of geophysical targets, including several of the recently identified A&T targets and step-out holes from earlier drilling that returned highly encouraging alteration in geochemistry. A standalone update on the Duck Creek drilling will be provided shortly. So again, they gave off nothing in this news release at all. I don't know exactly what that means, but let's do some, I don't know, inference here. An inference exercise. So this is Canonba, that's this here. This is where they hit what was it? 2 different targets here were drilled, which showed the best kind of, alteration and all that, even some copper and gold values. Okay, both of them were said to appear to be proximal to a potential porphyry. One hit something that's like distal parts of a potential porphyry, and lo and behold, it just happens to be the target that is closest to the northern part of the Duck Creek project, where we're doing phase 2 drilling, because Duck Creek in phase 1 showed so much promise. So I mean, yes, I think this has, I mean, what's the takeaway? Well, it appears that Duck Creek might have been a good area to go for phase 2. Because again, the extreme clustering effect. Where you have one, you probably have more. And not only does it appear, they're testing variety of geophysical targets. Not only the A&T, but they're testing the targets based on their previous geophysics. They're testing several of the recently identified A&T targets and step-outs from early drilling that returned highly encouraging alteration in geochemistry. And it was basically, mind you, the Duck Creek core that probably got AngloGold excited. It's like not long after that did this deal come out. So they saw something. It's like, okay, because Inflection, they're highly technical, so they describe everything they're seeing, and obviously it's over our heads. I mean, it's over retail's head, like myself. But it's like AngloGold was watching, and I bet other majors have been watching as well. Of course, given what's happening with the A&T technology worldwide now, with Barrick and possibly Fortescue and stuff. And this, I think, is where Kincora is, where AngloGold just, quite recently did another deal. So it's like, that screamed that they like Duck Creek. The hits at Canonba screams that there's a porphyry cluster here. And this happens to be the ANT survey here appears to be what set off the whole ANT porphyry hype around the world. So it's like, we have no idea if they're going to be able to make a first of all, we don't know if there are economical porphyry bodies here, but everything so far, the additional, let's say, staking by AngloGold, the hits now at Kananba, which looked very promising, what happened after the ANT results came out, everything points to encouraging, well, there are a lot of encouraging signs. And of course, again, with the extreme clustering, if there's one porphyry, there should be more porphyries. And the Kananba target kind of confirms that not only might there be a cluster of porphyries here at Duck Creek, it appears that the clustering might actually extend. Maybe it's the same cluster, it's just 4.5 or 5 or up to 9 kilometers away. My takeaway is that, before I go to the conclusions, so there was around, what was it, like 8 targets that were kind of downgraded or they're waiting to see. And it's like, I know some people like, oh Jesus, they downgraded a bunch of targets. Like, well, like I shown in my piece, balance of probabilities, if we assume most of what they've staked is underlain by the Macquarie Arc, the belts that produce these porphyries or host these porphyries. If we assume that this strike is what is it, like 1.5 times, maybe more than that actually. I think I put, yes, okay. Here you have Tomingli, North Parkes, Cove, Alcadia, and this is like the nearby total strike length. So take this, add this and add that, then you might be up to here or whatever. So like 1.5 times the strike of the outcropping parts of these belts. And there you have one absolutely massive $10 billion porphyry cluster. You have two, I guess, like couple $1 billion porphyry projects, and you have Tomingli, and you have Boda actually as well. But these are like, what does it say? Major mines, 4 major mines. Okay. Anyway, I hope you get my point. Yeah, so balance of probability. If we have 30 targets, or however many we have, I think we have like 20 left to drill. So it's like if we discard 8, we kind of upgrade 3. That's a pretty good hit rate. Because if you have 30 targets and you expect maybe there should be, I don't know, I'm guessing it, let's say 2 to 4. Let's say 2 to 4 major mines here. And of course they could potentially be too deep, etc. So it's like, yes, there's another North Parkes here, but it's whatever too deep, yada yada. We can't find it because it's too deep. We can't rule that out, so we kind of have to adjust as well for cover. But let's say 2 at least, 2 major mines. That means that most of the 30 targets are gonna miss. And like I said, we need to get lucky once. So again, I saw some complain about, oh, they downgraded a few targets. Let's be realistic here. We need to get lucky once. There is a very, very, very low probability that the majority of the 30 targets are gonna turn out to be major mines. There's no evidence of that happening here really. So we have 1.5 times the strike. I wouldn't expect there to be 20 porphyry, 20 North Parkes here, for example. So it's like, again, at the end of the day, our goal is to have at least 1 out of 30 targets to work out and make us a company maker. And here you can see the extreme clustering at North Parkes. Again, how the pencil porphyries look on a long section. This again kind of sounds like Duck Creek. And what's the scale here? I don't see the scale actually. 4.5 kilometer. Yeah, well, okay, here you have 4.5 kilometer. But that's, I guess, from E27, E26, so that's what, where's 27? I guess that's way up here or something. So I guess there could be quite a spread. And again, we know that Duck Creek alone has like, I don't know how many targets, 6 A&T targets, other geophysical targets, yada yada. So there's a bunch of targets there. And now we're hitting targets, what appears to be, close to porphyries. Appears to be porphyry targets 4.5 and 5 and even 9 kilometers north of Duck Creek. So it's like if we pretend this is Duck Creek, as long as if all of these were targets and we hit one and confirm it's a copper porphyry, that suggests that there should be more of these should be copper porphyries as well. So my takeaway is this hikes up the chance of success that Duck Creek and that area could host a porphyry cluster. We also know that there's 2 other projects where they're hitting encouraging signs as well, and we know 8 have been downgraded, and some or all might get discarded. Who knows? Again, we don't need that many. And we have all the orange I still are left to be tested. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. And then we obviously have Longstow, which show promise, so that's 18. Canonba, I think Canonba North got downgraded. Brevon showed some promise, yada. So we still have like 20 targets that are live, either just pure live with potential, which haven't been drilled, and or actually promising signs that there might be porphyries there, like Longstow and Canonba. Plus then we have the main dish right now, which is Duck Creek. And of course this might flip at any point in time. They might, now they're actually going to compile data and stuff like that, but we don't know. Maybe Duck Creek is not going to be the main dish. But just to have one, looks increasingly likely that there is a porphyry cluster here at Duck Creek, which again, with the news out of Canonba in this news release, increases that probability, because there's even more signs now that there's a big old porphyry cluster here. So that hikes up the probability of success that we will at least get one significant discovery. Anything above that is pure gravy on top. And again, there's quite a few left. Maybe in a year, maybe Longstow will be another porphyry cluster. Maybe Brevon will be another porphyry cluster that we're working on phase 2. Maybe some of these targets, maybe some of those targets. We have no idea. The upside is huge. If A&T also works really well, Jesus, this is gonna be exciting. I don't know a single other early pre-discovery play like this. I mean, I guess one that's somewhat close. I guess like Hannon Metals they might have found another near surface porphyry district. So that's, I guess, in terms of potentials, like amount of targets, amount of big targets, they are. I think they're the closest. But it's like for both companies, like just huge potential. They're looking for world-class deposits. If they find one, everybody's gonna be jumping with joy, yada yada. Eloro as well. Jesus, I've been ranting. Eloro provides update on Iska Silver Tin Polymetallic Project, Potosi Department, southwestern Bolivia. I mean, this is a very meaty news release, so I'm not gonna have time to go through it all. It appears that, they have been relatively quiet, but it sounds like they've been doing a lot of work in the background. They're pushing towards a PEA. As always, or which I said back then, it's like the maiden resource was just a snapshot of like the lower limit of basically what Iska could be. And quite quickly they obviously did some near resource or like infill drilling and showed that yes, areas that are labeled like as waste, they had some of the best drill holes there. So it's like Iska, with more drilling, this is gonna get better. And they're pushing it towards a PEA. And hopefully, yes, they beef up the they beef up the high grade started pit, and who knows, maybe the economics will be pretty good. I'm not going to even try to come up with a number what I think what the PA will show. But it's like, yeah, I mean, fast forward a year or two, and let's say we have a raging metal bull, and Eloro is out there with, let's say a solid, very large scale project. Let's say they also show, thanks to high grade starter pits, like very favorable economics. It's like, yeah, it could get fun. It could get fun. Because we know the metal they've drilled is not going anywhere. I assume they will need to raise some money sooner or later. I hope the perception of Bolivia gets better. I really do. Because I think this is a large deposit. It could be a huge one. All of that. Okay, I'm just going to touch on some things. Like I talked about line 1 recently. And you know this story is like, okay, another private placement that was subpar, but again that goes back to this one here. That might be one of the reasons, like it's been shorted, and then some can buy back. So it's like, okay, they make money on the downside, they get in at a cheap price, they force out a warrant because like the sector sucks so much. I mean, it's almost a perfect crime if that. I'm not saying that's the case, but I wouldn't be too surprised either. Because just how the stock tends to have traded, kind of going into financing, let's say. Of course, we know there's a lot of potential. The interesting things, I think. I mean, first of all, fingers crossed that this is the last placement, and that they are able to reach free cash flow, and then it gets up and running, and they can keep exploring and developing and get down to the 500 zone, which should, this stuff should print money, one would think. It's like, 75 meters at 21 grams per ton. That's not going to last forever and all of that, but it's like we have no idea how much deeper this goes, and they have a bunch of other targets as well. So, typically these are very large systems, so there might be, I think they have a slide. Don't they have a slide? Yeah, here. So it's like, this is a schematic, obviously, or a theoretical, that you have the Tuvalu, and that there's, basically one branch might be Tuvalu, and there might be a bunch of other branches. Of course, so right now it's 100% a developer story. If they don't make it make it into production, etc., maybe we can forget about the exploration potential. Or theoretically, I guess they could shut down the mine, etc. But that wouldn't make too much sense either, given that's like they shouldn't be too far away from. They expect to be in the 500 zone next year. So even if it kind of somewhat, let's say they don't get to free cash flow, it's like I would assume they would be pushing it to the 500 zone, because I don't see you losing money on that, at least. And that should obviously give them a lot of cash and a lot of stuff to do with, and maybe find extension and do regional exploration. So Blue Sky, that's what we're talking about. They make it into production. They eventually get into the 500 zone next year, jack it up to 500 tons per day. I forget how much gold that would be, but you can do the math, obviously. And start exploring, open at depth, as you see. What is interesting, and I've talked about this because I heard, I don't know who it was, I think Quinton talked about it. It was like, this is very, very fascinating. High grade narrow vein gold, flexible using blah blah blah, longer production starting May. This stuff. Network of gold bearing veinlets in a halo around the main lode. Veinlets in multiple orientations, often parallel or sub-parallel to drill axis. Underrepresented in infill drilling. So this is the exciting stuff. This I hope. This is the main reason why I hoped it actually will really work out. Why? Because you let's say, excuse me. Let's say you. We don't know the exact orientation of where the drill would hit it from, but it's like, let's say, I'm gonna try to find one. Well, I mean, let's say you drill something like that. And it's like, at face value, it just might be a sliver of a vein here. Or you drill it like that, for example. So you hit a sliver of a vein here, which might contain gold. But then you look at, like, if this is the main lode, let's say this is the actual, the highlight of the assay results. Like, yep, we hit whatever that is. I can see what I don't know what the width is here. What could that be? What is this? Papers? So what's that, like? I don't know. 3 decimeters? 1, 2 here? Whatever. Look at the samples that's been taken here. So they did I mean, it obviously looks like they kind of followed the vein in a sense. I mean, if they took the sample, right along, if the light stuff or the veins, if you know what I mean, or mineralization. Still, I mean, 15 grams, 15.50, 65 grams. Out here you have 10 grams. Out here you have 24 grams. And again, it's not like, yes, this might be the true thickness or whatever. But it's like, if you have a block like this, you're not just going to cut, this small part or whatever. It's like you're going to have a few veins that's crisscrossing and with some, get a good length to it, for example. So that is like, I mean, if let's say according to the model, this is almost barren because whatever, the hole plunged, the drill hole plunged in here and just hit this one. It's like, yeah, this is all waste, and it's like, actually there's a bunch of veins, but they're going in all kinds of directions, away from the screen, slightly down into the screen, slightly to the west, slightly, You're not going to hit all of that and get a fair representation in a drill hole. That's the exciting thing. That I mean, that's why I'm quite hopeful that they will that they will make it, because that's again, if the grade is underrepresented, underreported, the bulk grade, then obviously that's a surprise to the upside, which should make it more probable that they can do it economically. Anyway, I've gone so long now. I should wrap it up. As always, consider me by it. And it's like, again, as always, you might think some or all of these cases are very obvious. The risk reward is obviously favorable. It's like, okay, I know kind of what the risks are. I weigh that against the upside, and then you're just like, yes, this is a good bet, a very asymmetrical bet. That still means it's like, don't go all in on any one of these stories. I mean, the whole way to play that, even if you have the best mathematical play out there, which I'm gonna do an extreme, like there's a 40% chance or 30% chance it's gonna be a 20 bagger, 30% chance of a 20 bagger, 70% chance it's gonna go down 60%, they're not gonna have a project, or 70%. Mathematically, that's still like a hugely favorable expected return bet. Because it's so asymmetrical. 30% you're gonna 20x your money, 70% chance you're gonna minus 70% your money. If you could play those kind of bets over and over, I'm pretty sure that would work out in them. But the trick is obviously that you should have a collection of them, so you can play the odds. If there's let's say 30% chance of success, if you had 5 of said cases, the odds are that you're at least going to have one that pays off 20 times. And in that case, it's actually going to pay for all the others. So in that case, the portfolio is actually going to be showing profit. But if you play one of those, there's a 70% chance you're going to go down 70%. And from a compounding perspective, that's kind of unacceptable. Because then all of a sudden you do need the 200% just to get back to even. But if you have a basket of very asymmetrical risk reward stories, even if they're high risk, high reward, I mean, obviously you should have lower position size the higher risk they are. Again, just to be able to play the odds. if you play a bunch of high risk, high reward, like 5% chance of success. If they have success, they're gonna, I don't know, again, 20 bag. Even if it's a mathematical, plus EV play, you're still gonna need 20 such cases at 5% each position size for it to statistically give you one win. If you if you have 3 of those cases, the odds are you're gonna lose on all 3. Again, even if they're good bets mathematically. So we have to diversify away the risk. We can't put 33% in one case, 33 in another, and there's no room to diversify around away the risk, because you only have room for 3 such stories. So anyway, thanks for listening. Consider me biased. I think I own shares of all companies I mentioned. Some might be banner sponsors. This is not investing advice. I do not share your profits or your losses. Never invest money if you don't see the case, if you don't see why you invested in it, why you want to see, why it could work out, etc., etc. Otherwise, you're going to sell low and buy high. That's just how it is. Thanks for listening. Bye, guys.